Interpretation means A. Explanation of meaning and significance of the data in financial statements. B. Concerned with preparation and presentation of classified data. C. Systematic analysis of recorded data. D. Methodical classification of data given in financial statements. What does interpretation mean? Interpretation means explanation of the meaning and significance of the data in the financial statements. The correct answer would be option A. Interpretations, if you look at option B, interpretation means concerned with preparation and presentation of classified data? No. Is interpretation systematic analysis of recorded data? No. Is interpretation methodical classification of data given in financial statements? No. It's the explanation of the meaning and significance of the data in financial statements. Dash is the root cause for financial accounting. A. Stewardship accounting. B. Social accounting. C. Management accounting. And D. Human resource accounting. The correct answer here is stewardship accounting. Stewardship accounting is the root cause for financial accounting. Stewardship, let us understand, say in a company form of organization, you have shareholders and you have the management. The shareholders do not control the day-to-day affairs of the company. The management has been given custody of the resources, has been given the responsibility of running the business, and accounting tells us the results, the performance of the organization, tells us about the financial position on a particular date. So accounting is mainly done because ownership and management are separate, and owners need to be satisfied that the company is being run in the manner that it should be. So stewardship accounting is the root cause for financial accounting. In income measurement and recognition of assets and liabilities, which of the following concepts goes together? Periodicity, accrual and matching. B. Cost, accrual and matching. C. Going concern, cost and realization. D. Going concern, periodicity and reliability. In income measurement and recognition of assets and liabilities, which of the following concepts goes together? The correct answer is A. Periodicity, accrual and matching. You must understand income is measured, income is determined for every period. While going concern says that the company, that the business, that the organization will go on forever, income is determined in every period on an accrual basis with matching concept where costs are matched with the revenues generated. Matching the following basis, match the following, actually this is match the following. Basis to be shown in the balance sheet will be A, AS26, AS10, AS28 and AS24. On the other side, 1, 2, 3, 4, what we have is impairment of assets, discontinued operations, intangible assets and accounting for fixed assets. The correct answer. AS26 is intangible assets. So that's A3. 10 is fixed assets. 24 is discontinued operations. And impairment of assets is 20. The correct answer should be, so the correct option is A3, B4, C1 and D2. That's option D is the correct answer. Next, government raised funds through taxes and spent them for the public expenditure. The deficit or surplus at the end of the year is A, a transaction, B, an event, C, transaction as well as event, D, neither a transaction nor an event. Government raised funds through taxes, spent them, and the deficit or surplus at the end of the year is an event, is the result. Transaction is the activity and event is the result. So the correct answer should be B. Next, all of the following are advantages of accounting standards except accounting standards cannot override the statute. B. Accounting standards reduce to a reasonable extent confusing variations in the accounting treatments. C. Accounting standards call for disclosure beyond that required by law. Accounting standards facilitate comparison of financial statements of companies. What are the advantages? Accounting standards cannot override the statute. That is the only disadvantage of an accounting standard. From the above three, all statements are true. Accounting standards facilitate comparison. Accounting standards call for disclosure beyond that required by law. Accounting standards reduce the confusing variations in accounting treatments. But accounting standards cannot override the statute, cannot override the law. And that is one of the disadvantages of accounting standards. All fixed assets are put together and all current assets are put together under which of the following accounting stages? A. Recording, B. Communication, C. Analysis and D. Interpretation. Correct answer C. Analysis. All fixed assets are put together, all current assets are put together under the analysis stage. Z purchased goods for rupees 20 lakh, sold 4/5 of the goods for rupees 22 lakh, of which he received rupees 20 lakh in cash. His expenses amounted to rupees 2 lakh 50 during the year. Mr. Z counted the net profit as rupees 1 lakh 50,000 for that year. Which concept is violated? A. Entity, B. Periodicity, C. Conservatism or D. Accrual. Purchased goods for 20,000, 4/5 of these goods were sold. 4/5 of 20 lakh should be equal to 16 lakh. 16 lakh goods were sold for rupees 22 lakh, giving him a profit of 6 lakh. His expenses amounted to 2 lakh 50,000. Therefore, his profit should be 3 lakh 50,000. Instead, he has taken 1 lakh 50,000 because he received cash, probably because he received cash of 20 lakh. Therefore, he has violated the accrual concept. We take sales as accrued 22 lakh. He received cash of only 2 lakh. It is not cash basis of accounting. So accrual basis of accounting has been violated here. Correct answer should be D, accrual. In which of the following cases accounting estimates are needed? Employee benefit schemes. B, impairment of losses. C, inventory obsolescence. D, all of the above. In which of the following cases accounting estimates are needed? Accounting estimates are needed for employee benefit schemes, for impairment of losses, for inventory obsolescence. Therefore, the correct answer is D, all of the above. Which accounting concept satisfy the valuation criteria? Going concern, realization, cost. Going concern, cost, dual aspect. Cost, dual aspect, conservatism. Realization, conservatism, going concern. The correct answer, A. Going concern, realization and cost. Dual aspect, mind you, has nothing to do with the valuation. So fixed assets, they are valued at cost since they are expected to be used over a period of say 5 years, 10 years, etc. It is expected that the company, it's a going concern and would be there for the next 10 years. So it is recorded at cost, and over the life of the asset, it is the fixed asset is written off, is depreciated. Inventory, if you see, is again an asset. How is it valued? It is valued at cost or realizable value, whichever is lower. Therefore, the accounting concepts which satisfy the valuation criteria are going concern, realization and cost. Change in accounting estimate. What is the change in accounting estimate means? The difference between A, certain parameters estimated earlier and re-estimated during the current period. B, certain parameters estimated earlier and actual results achieved during the current period. C, certain parameters re-estimated during the current period and actual results achieved during the current period. And D, both certain parameters estimated earlier and re-estimated during the current period and certain parameters estimated earlier and actual results achieved during the current period. So change in accounting estimate would mean it can be both actually. Parameters which have been estimated earlier and now they are re-estimated, or certain parameters estimated earlier and the actual results achieved during the current period are different. So change in accounting estimate could be the difference of both, and therefore the correct answer is D.